The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. Let's check it out where everything's at right now. We got the S&Ps up 6.5 points. We have the Russell up 1.3 and the Nasdaq's up 28. Dow's currently up 88 points on the day. So Nasdaq leading the way, though. Looks like it is, it's up almost 1%. We got copper right now. Copper is currently up 1%. We got gold is pretty flat on the day compared to yesterday where it was getting slammed by Yellen saying that she was going to cut off the money flow supply. Yeah, right. And then we got Nasdaq is down natural gas. Wow, down over 3% on inventories today. We'll take a look. Looking out over at silver. We got silver down about 1% right now on the day. We got oil is currently, what do we got? Oil down 68 cents is pretty much going to equate to 68%, or 0.68%, I mean. 68%, that'd be nice. So, anyways, we got corn is currently up a whole $1.50, nothing there. But soybeans is flying up 22 points on the day, a 1.5% move. Gotta love it when the ags fly. And euro dollar is currently down 59 pips. We got the Aussie dollar up 53. We got the pound dollar down 22. After all these interest rate announcements, minutes, everything else, we'll have to take a look at everything, see how it all played out according to the news, plans, and specs. Check it out over the dollar franc. Dollar franc is up 30 pips right there. And looking at the dollar CAD, it is down 64. Dollar yen down 18. Aussie yen up 23. Euro yen is, moving right there, down 88 pips on the day. Looks like one of the biggest, if not the biggest, currency pairs, the winner so far as percent move. We got the pound yen is currently, which is not, a lot of times it's been flat a lot lately. So that's a big move for the euro yen. But again, it's with the press conference. We got the pound yen is currently down 59 pips. We got the euro pound down 16. Euro CAD's down 12, and pound CAD is down. It's like, or is that 125? Yeah, that's a little bit bigger than 12. 125. So euro CAD, massive move there, 1% on the day, and then pound CAD down 137 pips on the day. Wow. So big moves. A lot of people go, I wish I could trade those on Nadex. You can. You just do what's called a synthetic. You go and if you want to trade Euro CAD long, okay, you buy Euro dollar and you buy dollar CAD. And the dollars cross out, and now you're long Euro CAD. If you want to do Euro CAD short, you sell Euro dollar, you sell dollar CAD. Dollars cross out, now you're short Euro CAD. Same thing in the pound dollar, dollar CAD. So you can trade. They're very volatile, as you can see, especially on these big news announcements. And you can trade them. You can take advantage of them. All right. So what else do we got going on that we could look at over here? Put all the different pieces together. I want to look at the news. So we had all this news come out and playing out. And let's pull up some charts. Let's put the pieces together and see what we got. I guess we'll do a simple one real quick. Let's check out natural gas inventories. And let me pull that one on up. And remember, natural gas, this inventory report comes out every single week, okay? So why is that important? Well, before I didn't really trade it that much, but I started now with the expected ranges and stuff. It's getting a little bit easier to trade. And update these, basically every single day, every 4 minutes they get updated. And we put the deviation levels, of course, right there on the site for you as well for expected moves on the day. And then when you get these massive moves, a lot of times you can have massive implied volatility. But look at this, okay? This tells you whether you got a straddle, a strangle, whatever. You just look at the pricing on the spreads, the binaries, and that was our expected move. And we got it exactly for that hour, for 10 to 11. This plot's up front ahead of time and tells me how big the expected move is. Like, I already have the expected move for the next hour already done before the hour even starts. So we got this one done. It doesn't change during the hour, okay? And the next hour is already done. Now it's just trying to figure out where it's going to start at. So, but as far as the open to high, open to low, already set. So we know what those expected moves are before and after. I can get on in there. I can look at the details and like really dive into it here. Check this out. We'll dive in. I mean, look, boom, expected move, perfect expected move, perfect expected move, perfect again and again and again. So using those expected moves can be huge. It also can let you know how to trade these trades. And sometimes the implied volatility is just stupid high after them, especially when you get that big of a move. So that is tempting me to go on over and check out if we might have a trade. We might. I don't know. But let's see if we got a trade over here that we can take advantage of on natural gas. Okay? That will take me just a minute. And I even have some questions from some traders that we might go in and dive into on a calculations trade that they were doing on an iron condor, trying to put the pieces together. So I'll see if I got everything from my need for that, and if I do, I'll answer it for you and help you out there from Robinson. All right. So now, on this trade, though, let's look at it real quick. Where are we at? Into the hour. Let me look at the box spreads, because like I said, sometimes the implied volatility is just stupid high, especially after you have these big moves. And I've been amazed at how big it can actually be. So let's see what we got. We have 2 o'clock. We have 2:30. Really? So coming up here. And like, so I'll look at it and go, okay, what would be an acceptable move right here? So I'll pull this up just to show you what I'm looking at. I'm trying to see if I got anything that would work well for, usually it's going to be like a lower profit type trade, but I want to flip it upside down, okay? And sometimes it's just huge backwards. So like that right there, that's going to be right in the middle. That's not going to help us too much. $6, that's not going to do anything. Like that's the type of trade. But every once in a while, we'll see just some massively inverted implied volatility trades. And if we do, it can be some great profits. Looks like there's not one right now, but every once in a while, if you'll check it like right after the news, okay? Like right at the end of that hour. Okay, so the announcement comes out, boom. Market moves for the next hour. Flies, okay? Right here at 11 o'clock. So this is sort of just teaching you a trick. Notice how it goes really flat after that. Okay, we usually don't get massive moves after that. That's when you can go in and you can look for like a really inflated option for like a 12 o'clock expiration. Because the implied volatility went really high while it was flying. At the end of that hour, right as the end of that hour is coming up, man, and you're looking for 12 o'clock. And you're trying to see if you can find just a really good premium collection trade because you know, like, hey, it's probably going to stay inside this half deviation range here over the next hour. And let's see if I can find one that's wider than that on my profit potential. If you can, awesome trade. If you can find a straddle or a straight that's closer than that expected move up or down, awesome. Or if you find one that has too much premium in it that will put you outside of this area, then great. So any one of those could work out really well. All right, so we have that down. And then I wanted to look up, I got somebody who's asking a question. I just want to see if I can. Let's see, I'm going to read it in detail in the commercial break so I can be caught up on it. And then we'll come back. Okay? All right, so let's go back. Let's look at the rest of the news that we got. And see what else we can do here. Okay, we really don't have a whole lot coming up, by the way. But we did have the Aussie employment change last night. So let's look over at the Aussie. See what possibilities existed there. All right. And the report came out. Let's see, we look up the details on it. RBA monetary policy statement. We have that, but that's not what I'm looking for. That's coming out tonight. Okay, the employment change, 930, came in at 14.2, better than expected at 7.5. Unemployment rate came in at 5.8, better than expected at 5.9. Release came out at 9:30 in the evening. And let's see here. Oh, I got to get another chart loading up because I have a data feed connection issue there. Okay. Well, that's easy. I already got one. Let's just pull it up. A little bit of a pain, but there we go. Okay. So right here, you can tell where the report comes out. We get a move from about 9,300. And let's see here. Usually the move doesn't take that long. Okay. But it'll, usually within a minute or two, like it'll actually make about 90% of its release. But it really took off this time. And so let me look at it, and we'll see what happened. But there in just the first minute or so, boom, it pops up, and say 925, 930. So yeah, right there. So we get a move from 93.30, pops up to 93.60. We get 25 pips off of it. Okay? And so it was about a 30 pip move just out of the gate, which would have put you pretty much at break even on the trade if you would have hopped out right away. But this one sort of did a little bit of a head fake on you, and if you were watching the fundamental news, you would have known. If you weren't, wouldn't quite have seen it as easily. Pulled on back, it did what? What did it do? What is that? That's a 50% retracement. Okay? If we go over here and we look at it, you can see like right there. Actually, if we do like the pre-news, here we go. There we go. All right, so literally we got a perfect 50% retracement from the low to the high right there. Perfect. Golden ratio, Gann ratio, fib ratio, you name it. And then it goes right back to what would have been a volume spike high, okay? A magnet price. Pulls right back into that and keeps going. Should not have surprised. The 50% pullback would have made you nervous, okay? But should not have surprised you based on having both of those numbers extremely good that this thing was running. Now, depending upon what expiration you chose, could have impacted, whether or not you got out that soon or not. If you chose 10 o'clock, yeah, you want to get out. If you had 11 o'clock, you had time. So, Mr. Punts, again, what expiration did you choose? But we'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so Trader writes in, asking me a question. Trying to figure out, what did he do wrong on this trade on the Aussie retail sales or employment here trade, and says he entered at 6. I'm not sure what expiration he chose. He didn't quite put that in there for me, but the rule was to enter for the 11 o'clock expiration, and so not 7, not 8, not 9, but 11 o'clock to get plenty of premium in there. Also, the need was to bring in $30 on the trade. So again, I just don't have all the details from you, so I'm going to answer you with what I got, because I said I would cover it on the show, but that was on for the 6th. So if you're asking about the New Zealand employment change, is what I'm guessing, or the Aussie employment change, but don't do the butterflies. You barely will ever see me do a butterfly. Mentioned that you did a butterfly. I almost always do the iron condors. Understand that the further out you go in time, the more premium you're going to get. So listen very carefully when I lay out what strikes to select, meaning when I say like what expirations to select, when to get in, when to get out, because I'm looking at like when does the market move, when does it not move, so that way like if it's moving too much at this point, then I may have to enter later. Like let's say from 6 to 8 it moves a lot, but the announcement's at 8:30, then I may choose to not even get in until 8 because I don't want that movement messing up my range bound strategy. But also you went for $17. I would never go for a $17 wide butterfly at all. Would not suggest going for a $17 wide even iron condor, because the market, we expect it to move 30 pips, not 15 up, 15 down, but 30 total. So a 30 pip up move, 30 pip down move really was going to get you on that trade. So you definitely want to have those little pieces put together. And he put employment on Tuesday, but we didn't have Aussie employment. So I'm trying to figure out we got Monday, we got Tuesday, we have no Zealand dollar employment. So there's retail sales on Tuesday. And I'm just trying to help him work through his trade. So, but yeah, so we got, let me see here. So I got like the New Zealand dollar one. This is the one I put together. That trade worked out perfect. And let's see here. So right there. And then let me see what else we got. So we got the New Zealand dollar employment change report. We also can go over, and what other ones did I have that I put together? The Aussie retail sales report. That one worked out excellent as well. Okay. Again, you can do butterflies. I prefer condors. All right. So if you find a wider butterfly and you know how to calculate your risk, reward, everything else, awesome. But you definitely need to compare the two. And I'll first find the condor, and then I'll look at a comparable butterfly once I know what my break-evens are. Make my decision. The problem is if it expires one tick out of the money on a binary butterfly, you're losing, not losing everything, but you're losing one side. And, on a condor, you'd only lose like $1. They'd only make $1 for it only expire to tick in the money. But so I'd rather have like that little lower leverage than that all or nothing thing going on. Trader mentioned that they lost on both sides of the butterfly. That should never happen. If that happens, that means you exited one side and you held on to the other. If you exit either side of a butterfly, you get out of both at once. You take the profit on one side, and it's sort of like you wouldn't do a vertical where you go in and you close out the losing credit spread and then leave on the debit side that may, or the sold call, and leave on the bought call. I mean, you could do that if you really think it's going to fly, but all the money that bought call made that helped lower your loss, you could lose it all back and get hit twice. So usually you just get out. So definitely, you don't want to just leave both sides on there. And then if you're talking about employment change, I had a whole range of trades that you could do right there. There was literally like 4 different trades that were available that you could have checked out. So I'll put those in there for you. And then, because I'm just not sure which exact trade on the Aussie you're talking about. So, but that gives you the New Zealand dollar employment change, which was Tuesday. The Aussie dollar employment change, which was Wednesday. That gives you the Aussie retail sales, which was Tuesday. So, a lot of trades there. But, yeah, you definitely want to go, step by step through the different pieces I give and lay those out. As far as needing some help on the Iron Condors, I will put a link as well over in the Tiger's Den for you. All right, we'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so we're going through, we're looking at all these trades, and I've got another good trade, question that came in by a user here, and so wanted to go through this one because I thought this was a really well-written question. Basically says, hey, can you help me out on calculating and evaluating to see if this is an acceptable range for the Iron Condor? This is for, I guess, the interest rate announcement here on the Aussie dollar. And he lays out all the strikes for me, and he puts in the prices and everything. So we got 1 a.m. expirations, and we got where the indicative price is, basically where's the Aussie dollar trading at this time, and what time is it, and all that fun stuff. And so looking at all those pieces, I'm like, yes or no, does that work? And not really. The premium was just not high enough. But let's look at it and go down to the specific trade over here. This is May 6th. Now, that's 1 a.m. versus using a 7 a.m., which I would prefer, honestly, a 7 a.m. So it went up. It popped up 92.86 to 93.17. Okay? Try to make that a little easier. We'll say 92.80 to 92.17. Basically would have been like 37 pips. So about 30 pips up. Came on back down. We expected about a $30 move. If I expect a 30-tick move, I want $30 in premium. Okay? And the reason I like 7 a.m. is, as you can see looking at the chart, how it takes off later in the day based on this report. But either way, I'd be looking at either at a straddle on this trade because the risk was so much lower. If I expect 30-tick move, I want at least $30. So you can look at it that way. I basically said, ignore the middle one. You don't need that because you're just looking at the upper and the lower. So if you look at the lower, then like the 92.80 to 93.80, we take that indicative, we sell it. That's 16 ticks of profit, which is, how did we get that? Well, the bid was, 92, basically we go in, actually maybe been a little less than that. So, yeah, like 11 ticks. For some reason I thought 6. But we got very little very little profit on the trade. And I'll have to rewrite that to him. 1991, so yeah, 11 ticks of profit on the bid if I sold it. And then I was right on the ask there, only 5 ticks of profit on the ask. So we're talking, 11 plus 5, we're going to $16, $17. Take out the fees on that. We're going to go down lower, down to about $12 on the trade. $12 profit potential on a 30-tick move. You're not going to win. You're going to lose. Now it may work. Okay, it may fly up and you left it alone and you didn't touch it. And you rode through the ride, the drawdown, and then it came back. And in this case, it did come back, okay? And could have been easily profitable for you because it really did come right back to it. And the Iron Condor would have worked, okay? But it's not the trade I would have done. There just was not enough premium. So my answer would be no. There was not sufficient premium, therefore no trade, or look at the opposing trade on that. And let's see here. I'm going to re-update that for him and tell him, it's 11 ticks. But yeah, after you add in 11 plus 5, you got 16. You take away about $4. I mean, not quite, but about $4. You got $12 in max profit on the Condor. I guess you could say 12. What would it be? $3.60, $12.40. Okay. After you get down on both sides, that's not going to work for a 30-tick profit. Okay, even if it does make money, okay, which it would have made about $6 on the trade, just there was no reason, no value to take that trade. So the other one would be, you'd have to be ready to exit. And ideally on a straddle, you want more time. So that would be, you want to be able to choose maybe a 7 a.m. expiration on that trade. So, because it does move. It moves huge. But you just got to give it the time to get there. So, like I said, it moved up about 60 pips. So, you would have wanted, ideally a cost of around 35 or 40 on that trade when you did that. All right. And he could have got in on the 1 a.m. for $26. $12 on the Condor if left alone, profitable. Straddle if left alone, lost. But if you took profit, would have been okay. More of a break-even trade for the 1 a.m. But if you would have chosen the 7 a.m., then you actually could have been very profitable on the straddle. So hopefully that helps. And let's see. So I got them taken care of. Yeah, if you're a member inside the section, you can always ask me questions, and I will be happy to reply to them for you. Okay, so we got that one covered, knocked out. Let's see what else we got. Let's look over at our pound trade. Okay, and we'll see what's there. And right on over here. Pull it up. See what we have. All right, so on our pound trade, what we're looking at from last night, we have the official bank rate. Usually don't expect much of a change. It's going to be about 30 to 50 pips. To figure out what's going on there, but I'll come back to it. All right, so we'll go over here, and we were looking at 6 to 8 a.m., and which would basically be 5 to 7 a.m. here on Central. So we're going to get in right here. We did have some volatility. We had some decent volatility over here. Wasn't as much as it looks like, though. So let's see here. Does it have I don't know if they have. They need to add that. Can't believe Thinkorswim didn't have it. You probably do. I probably just don't know where it is. But it's basically a ruler where it tells you how far a move is. So I'll have to look in there and see if they have that feature. But right over here, if we go over, we look at, if you got in at 6, and which would have been 5, okay? And right here, All right, so we're getting about 69.60, and then we take that to 7. Then the lowest we got there was about 69.60, about 20 pips. So, and I said we expect about a $35. So, if you can get $35 to $50 would be even better. But you're talking, right there, 25, $15 to $25 profit on that trade. And not a big surprise. Now, what about the euro dollar? Because then we had some massive volatility. Euro dollar interest rate comes out, then the ECB press conference comes out. That's when the real action starts. So let's roll it over, check out the euro dollar. Yeah, see, there's some movement. All right, so euro dollar. I actually go neutral. I play this trade neutral before the news comes out. So 6 to 8 or 5 to 7 central. What kind of move did we get? Okay, I'm like, expect nothing. All right, so $30 would be awesome. 5 right there, 39.40, and we end at 7. Okay, so right here, 39.40. So what are we? 100% profit. Max profit on that trade. Maybe $1 you didn't get because it wasn't right on the strike level or something. But basically, max profit on the trade. And then we go into now let's get ready for the thing to go haywire. And we expect it to break out. So look right after that thing's over, but we're hopping in. We're looking for a straddle. What kind of move do we get? Let's see. Well, right here, we go in. Press conference starts up. 39.45. Pops on up to a high of 39.94. Okay, so we get a 50 pip pop high. Comes on back down. Flies down. Okay. Just on the 9 o'clock expiration alone, we're already here at the low. And we move from... I said pre-news conference here. We went from 39.45 down to 38, basically 49 or so. So basically we're talking about a 50 pips up and then 150 down from there. You did a straddle, you were happy, okay? It'd have to be a really expensive straddle in order to iron condor that trade. So, but a really, really cool one, good one. It worked out really well. And pretty much whatever you paid, you should have made money. Okay. So, I'll look at 10 a.m.s, would have been fine. 11 a.m.s would have been fine. 3 p.m.s, even better if you can get them. Sometimes I've hopped in on these trades and I paid like $3 more for a 3 o'clock versus like a 10 or 11. So I always make sure I'm looking at those different ones, and you can see that when you use the scanner. You're not going to see that when you're on Nadex trying to hop between 10 different things. So it helps you make more money. And then we had natural gas. We covered that one. Tonight, we got the RBA rate statement. We're not expecting a big move, but there's been some decent moves in Aussie news lately, so I'd definitely just be aware of the volatility of what could come out with that rate statement when it gets released at 9:30. Okay? So there could be sort of flat while the news is waiting on it to come out. It's just the rate statement. It's not a press conference, big deal thing. But just the notes from the last meeting minutes and all that. But be aware of it. And just so you don't get caught off guard. Now, moving on over here to Friday. Yeah, Friday coming on up. Don't forget, we'll have the Bull Bear Binary Hour tomorrow morning, me and Tommy O'Brien. And look forward to helping you out on that one. And let's see here. As long as I get back, I got the kids. My wife's going to be out, so I got to get them to school and get back. But we had a great show last week. Made about $5,000 on a trade we did on the air there. So hopefully we'll keep it going. Well, let's see what happens. I mean, we look for the setups. If they're there, we take it. If they're not, we don't. And that's just trading smart. And let's see. We got manufacturing production is going to be coming up. And we got employment change in Canada. So jolts, usually not a big deal, but manufacturing production and employment change, both of those could be some good trades. So let's see, what do we got so we can get you set up for those for tomorrow morning. And our manufacturing production, pound trade. Let me check this out, see what we got. Okay, manufacturing production, just reading out the past 12 releases here. 60 pips, first 5 minutes. Next one about 18, 20, 35 pips. 15 pips. So this is by 7 o'clock. Okay. 40 pips, biggest move. Came on back down there to about 10. 60 pips. And then we go, let's see here, 25 pips. All right, 10 pips. Wow, 115 pips. 20 pips. 20 pips. Okay, 3 out of 12, big moves. The rest of them did not exceed 50 pips. Most of them, like if they even got up to 40, they came back down to about 10 or 15. So, what would I do? Well, I'd be looking at an iron condor, and I'd be looking to take my stop if it hit 50 pips. Because the ones that really exceed that, either, they really just don't come back. I mean, there's one that went 60 that just sort of stayed at 60. So you might as well take it at 50. So how do you do that? Well, go in and put an iron condor on. Look for a 40 pip or less, okay? Ideally. So getting down to 11 o'clock, I want to say, let me check entry time for you. Okay, I just like to see movement pre-entry time. Let's see here. Yeah, the later you can get in on this one, the better, because it may trend into it. So you could try the 11 o'clock. I would demo the 11. I just don't want it to get to move up on you by 30, and then of course it moves up by 30, down by 30. So probably like closer to 12 or 1 would be a better entry time on this trade than 11 if you're up at that time of day, night, whatever, morning. So looking at that time frame right there, and then hopping in the trade, hopping out of the trade. Again, you use stop triggers, whatever, to help you out. But you want to get out of that trade if it hits basically about 50 pips. And 9 out of 12 did not hit it, would have been profitable. So, and it's about the probability. It's about putting the probabilities, the odds together. And they add up, they work out. Awesome. If they don't, get out of the trade, move on to the next trade. And 9 out of 12 profitable for, let's say, 25, 30 bucks. And if it hits 50, you understand you're losing like 15. Okay? You're not losing 50. All right? So like 3 of them you lose like $15, and 9 of them you make say $20. You're doing good. And now I'm talking about 1. You can do 10. Obviously you can do 10, 100, whatever you want to. But and when I say $50, how would you do that? Well, just basically base it on what the strike, what the price would be of the pound dollar, 50 pips above where the pound is above the spread. So that would be a way to do it. That's how I do manufacturing production. Okay. What else do we have beyond manufacturing production? We're going to have a trade balance. Who cares? It's going to come at the same time. It's not the mover. Employment change. Canadian employment change. What kind of moves do we have? When it's by itself and not with our NFP, because that's the trick. Okay, we don't have it at the same time as ours. All right, I'll cover that when we get back after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks. Okay, this is on the USD CAD employment change. Usually you'll get a bunch of movement right out of the gate, okay, and then it'll retrace back. There's only one time we actually had a massive move in the last 12 months in the dollar CAD between that release and 3 o'clock. So a number of times it has moved like 60 pips or so, but then pulled back by 3 o'clock. So my goal on this trade is get in somewhere around 7 o'clock, go for a 3 o'clock expiration, okay, and try to get as close as I can to 50 or 60 bucks on the trade. And I'm going to give myself a 100 pip stop, which means I'm going to have a $40 risk on a $60 trade. If I bring in 60 bucks max profit and moves 100 pips against me, I'll lose $40 in the trade. But I'll make 60 if it ends in the center. If it ends in the center of like my range there, then I make 30. But pretty much that's the plan: is 100 pip wide stop, $60, 50 or $50 or more max profit. So on that trade. And that's going to be for our dollar CAD employment change that comes out at 9:30. Okay, I mean, it's over the last 2 years it's moved like an average of 75 pips, but over the last year it's moved like an average of 30. Okay, so it's really dropped down quite a bit in the last 12 months, and that ought to get you going. All right, let's see. That'll take care of the Aussie dollar. And that'll take care of the dollar CAD. That takes care of the pound dollar. We did reviews over all the trades that are coming up. And I'm all confused here by the radio operator. Okay. So, we got Saturday, nothing going on there. We got Sunday, we have a business confidence report. Not really worried about that. Monday, going to be a quiet day. Going to have a couple FOMC members speaking. Really not a lot happening. So not looking for any major news trades Monday. Tuesday, we'll have some retail sales reports coming out. That's about it. Wednesday, we got some PPI numbers. British unemployment rate will be coming out. CPI numbers. Building permits. Yeah, quiet news week next week. So won't be near as much news. And that ought to cover most of the week. So if we don't have a lot of news trades next week, that will free us up to talk about some other strategies and put some pieces together, okay? All right, so with that, what else do we need to look at? I think that's really all. That gives us all of those numbers across the board. And the last piece is just checking out where the markets are at right now before we wrap up for the day. So we still got the S&P in positive territory, up 2 points right now. We got the Russell is down 3. We have the NASDAQ up 13, and the Dow is up 64 pips on the day currently. Looking on over at our metals, how they end up. Gold basically ended up flat on the day today. Silver ended up down 1%, and copper ended up 1% on the day. Natural gas, obviously, we had that nice inventory move. That's about it. But Wall Street is climbing, and so far, what is it at? 532. So that's good. Hopefully, just keep on moving up. See if we get this strong market going, or if it's going to break down. Eventually, it's going to pop, but can't play that way, man. It's got to play it as it's going, day to day. All right, we'll see y'all next time right here on the Diagnostic Trading Hour. Stay tuned for another great show coming up right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.